We also heard from CPPIB today with its results, and the plan did manage to add some $17 billion in assets, now close to $410 billion under management. Mark Machin is its president and CEO, and he is with us now. Mark, thank you for being with us. And I guess I want to start with just context from you around what the numbers that we're seeing, because obviously some of it, we're going to separate out the results from the worst of what we're dealing with. But just how did it play in?
Yeah, so we were hit by the pandemic in the fourth quarter. So our fourth quarter was a negative quarter, but for the calendar year for 2019, we had a very strong year. We were up about 12.6%. So while we were down about 3.7% in that quarter, January to March, the overall year, March to March, we were up 3.1%, net of all costs and everything. So it was a solid performance given, really dramatic March period. And I'd say some of the strategies that were, sold off or under pressure in that March timeframe, a number of them have bounced back already, given the strength of markets you were just talking about.
Yeah, and I mean, I know that you have structured this portfolio so that it is durable, it's risk resilient. You look to the long term. How much of that has played out here that you've said, you were glad you were in X, Y, or Z because of COVID-19, and how much of it you just simply couldn't have foreseen, Mark, that this was going to come our way and you needed to risk proof against it?
Yeah, so I mean, there's nowhere to hide in this pandemic from a geographical perspective. But there are certain things that still did function. The basic bond equity diversification did work. So government bonds rallied very significantly when there was that rush to safety during the big sell-off. And we're having a big government bond portfolio. That offset some of the decline in equities. So that diversification works. And then on a geographic basis, as we know, there were certain economies that were coming back out of the pandemic to some extent, while Europe was really wrestling with it, and it was just starting to hit North America. So the geographical diversification certainly worked from a time point of view, and offset some of the worst hit. If we were all synchronized in one market, it would have been much more impactful. So that diversification worked well.
What are your thoughts? We've seen obviously some enthusiasm for investors who are kind of hoping the worst is over, or at least that the way stock markets think the worst is over. So a few months from now, do you think are you fearful that it's not behind us? What's your thinking about kind of the level of optimism you can bring to this?
Yeah, well, I think there's a couple of things. One is the health impacts, and then the second is the economic impacts. And on the health impacts, back in the day before I came into finance, I studied medicine. I was a medical doctor, and so I follow the science underlying this as closely as I can. And I mean, very very simply, I mean, if you look at this R0, there's this ratio of how many people how one infected person spreads to. As long as that's above 1, then you're going to have this gradual increase in the load, and eventually healthcare systems will be overwhelmed. So you need to keep it lower, and so you've got to keep a keen eye on that. And a lot of markets they're not quite got to that situation right now, and the virus ain't going to stop. As long as throats or noses or lungs are near each other, then it will go from one to another, and that's it's quite efficient at spreading. We know that. So we're going to have to manage through that over time. The second thing is the economic impacts, and there, I think you're going to have until there's widespread immunity, you're going to have to keep those lungs and throats away from each other, and so you're going to have some type of social distancing, some type of drag, some type of sand in the gears of economic activity. So while a bunch of it may come back, which is great and really important for people, really important for people's employment and well-being. There'll be some dampening effects on it until you have widespread immunity or some impactful treatment.
There will be, through with all of the uncertainty about how all of that unfolds, there will be opportunities to invest in this process, including in distressed credit. There's obviously a variety of opportunities for folks that have capital. You're one of them. What's on your mind when you think about the places that you could see some, maybe even once in a lifetime opportunities?
Yeah, so there were certainly a few of those in that dramatic sell-off, and if the thing, for opportunities where you can move quickly, there were some remarkable opportunities. I think a lot of things have come back right now, so they're not massive burning opportunities, given how much the force of government and central bank support has really put huge amounts of liquidity back into markets. Markets are functioning quite well in almost all respects. And so I think we're looking at trends and what trends have changed. There's certainly, if you look, for example, at real estate, which is a very topical area, I mean, data centers and logistics and warehouses are performing incredibly well. And at the other end of the spectrum, you have hospitality that is obviously quite impaired right now, and shopping malls, which are going to struggle given their model is to get as many people through as possible, and that's hard when you've got to socially distance people. And then the big question, the one where the jury's out a bit, is office. And you got on the one hand these short-term forces for bigger floor plates and keeping people spaced, but then you've got, depending on how long the trend stays, for people to be working more flexibly from home, working from remote, how many people do you need in the office? And then you've got elevator capacity and how many people you can get up and down, provided you've got spacing. My guess is, in the longer term, prime office continues, because while it may take a while for us to all get comfortable being back together, I think that we're social animals, and we like being around buzzy places. We like being around buzzy, activities, and we want to be with people, and so I think that will come back.
And just in terms of where you're thinking geographically, have your thoughts changed about which regions emerge from this better than others and where you want to be placed?
Well, I think it's sort of too early to tell at the moment. So there's certainly some economies and some markets that seem to have managed this well at the moment, and some of those like Korea, Taiwan, mainland China, Hong Kong, Japan to some extent. These markets have recovered, or certainly the economies have recovered to a great extent, although they've all got their own idiosyncratic issues. And so, so I say from a timing point of view, they've recovered, but it ain't over yet. I think we've got a long way to go before we have widespread immunity, which we develop one way or another, or this effective cure. So we'll see.